Today, Bitcoin returns to the $107,000 level to start the week. Crypto trading firm Gemini confidentially files to go public. And Michael Shaulov of Fireblocks weighs in on what stablecoin regulation in the US would mean for the industry. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Cryptocurrencies heading higher as we kick off the week. By noon Eastern, Bitcoin crossed back above the $107,000 level, a 1.5% gain and well above the $105,000 level from Friday. Ether also in the green today, rising around 0.8%, while Solana jumped nearly 2.9%. And over on Wall Street, shares of stablecoin issuer Circle are on the rise as of midday after debuting on the New York Stock Exchange last week. The stock is up 1.6% as of noon Eastern. Okay, let's talk about the top stories. After Circle's successful IPO last week, another crypto company has set their sights on the public markets. Gemini, the crypto firm led by the Winklevoss twins, confidentially filed on Friday to go public. Price range and share count haven't been established yet, but by filing confidentially, Gemini can test investor appetite without immediate scrutiny on the company's financials. The move comes as investors hope Circle's debut could open the floodgates for more crypto companies to enter U.S. equity markets. Next, Coinbase CEO Brian Armstrong says the crypto exchange is working to limit the number of accounts it wrongfully suspends. In a post on X Friday afternoon, Armstrong said account freezing has been a, quote, major issue for the platform and that Coinbase has made it a priority to fix it. So far, he said the issue had been reduced by 82%, with more fixes on the way. Armstrong's post was actually a reply to Coinbase's vice president of product, who said account freezes should be rare, limited to situations that warrant them, primarily when the company is legally obligated or to protect users from things like scams or account compromises. Coinbase's website lists a number of reasons an account could be restricted, including buying or selling restricted assets or complying with authorities to freeze funds. Last, the so-called Bitcoin family has overhauled their crypto storage methods after a string of high-profile kidnappings. Didi Taiwutu, the patriarch of the family, told CNBC that they had changed everything, ditching hardware wallets in favor of a hybrid system that's part analog, part digital. That includes seed phrases that are split and stored on encryption services and across 4 continents. This replaces the family's old hardware wallets that were stored across multiple continents. Taiwutu said that even if someone held him at gunpoint, he couldn't give them more than what was in the wallet on his phone, which wasn't a lot. Now, the switch up by the Bitcoin family comes after multiple high-profile kidnappings related to crypto holdings. A crypto investor was charged with kidnapping and allegedly torturing a man inside a Manhattan townhouse, and similar cases have popped up in Canada and Australia. All right, turning to stablecoins for our main story. I spoke with Michael Shaulov, the CEO of Fireblocks, about what regulation in the space would mean for the industry. The digital asset infrastructure company released a report last month on the state of stablecoins this year, and we discussed that research as well. Let's focus this conversation on stablecoins, especially as we have seen some regulatory advancements for stablecoins in the U.S. recently. Last month, the Senate advanced the Genius Act stablecoin bill on a bipartisan vote. Now, that bill is now poised for a full Senate vote, which could happen any day now. If passed, it will then move to the House for consideration. Now, I was at Bitcoin 2025 in Las Vegas a couple of weeks ago, and at the crypto conference, Vice President J.D. Vance told attendees during his keynote address that he's optimistic that the Senate will pass the bill and that the House will follow suit. The vice president believes that if the Genius Act is enacted, the use of stablecoins for payments will significantly increase and market transparency will improve. What do you think will happen if we get stablecoin regulation here in the U.S.?
I think we definitely agree. What we actually see across the board is basically that there is a growing adoption of stablecoins. And that adoption was actually going behind the scenes for the last couple of years. We've even seen that adoption increasing through 2023 and 2024 during the bear market of crypto. Mostly, I would say, grassroots adoption. And we're seeing huge amount of financial institutions, payment companies, and banks that are looking to basically go into the space, take advantage of the technology. And the most important thing for them is really the regulatory clarity.
Now, during his keynote address at Bitcoin 2025, the vice president also mentioned that on top of passing the Genius Act, which focuses on stablecoins, the Trump administration has been focused on passing another crypto-related bill focused on market structure. What do you think a regulatory framework for crypto in the US would mean for the industry, and would it change the way your company operates here in America at all?
So we've been focused on I would say the international markets, but more specifically our headquarters here in New York. We've been active with all the different fintechs and the different banks and the different financial institutions in the US for the last 7 years. Bank of New York Mellon, one of the biggest banks in the US, is using our platform and technology to do everything from custody to wallet infrastructure to some of the pillars around tokenization. Some of the biggest payment companies like WorldPay and Visa and Stripe, that is now using Bridge in the acquisition, are using us, and they're all American US companies. We are seeing just like an increased pipeline that is going to bring a lot of the activity into the US. And one of the interesting data points is that we ran a survey recently about the state of stablecoins, right? And there is basically a huge demand to adopt stablecoins. One of the most interesting findings over there was that 90% of the financial institutions in the US are either already in production or testing, or they have a strategy in place to leverage stablecoins. And then kind of US centric. And that's basically a sharp increase. We actually ran the same survey back in 2023. So we have those two data points. And maybe the most important thing, that 50% of the regulatory concern is gone, right? So they're all basically reporting that there is better regulatory clarity, which actually allows them to move.
Focusing on that survey you just mentioned, did anything surprise you at all?
I think actually the level of engagement and how many of those institutions are already in either production or strategy phase, that was somewhat surprising, right? Because we're working with quite a lot of them. And the fact that the entire industry is basically trying to figure out how to use this new rail so quickly is surprising. I think the most important thing is actually that entire shift started to happen just after the elections, right? I would say that in most 2024, we've seen some of the early adopters that were coming into the space. I think the most famous case was that Stripe acquired Bridge, one of the fintech companies that is providing stablecoins. We are proud of powering their infrastructure. But they were one of the few data points back in 2024. And that just basically shifted dramatically once we moved into 2025.
Now, sticking with stablecoins, shares of stablecoin issuer Circle soared more than 150% in the company's New York Stock Exchange debut last week. Circle joined Riot and Marathon as one of the few pure play crypto companies to list in the US. What does this move signal to you? Do you think we're seeing more crypto-related companies going public in the US now that the industry is enjoying newfound political favor under a friendly US administration and SEC?
Yeah, definitely. I mean, I think that both Circle, eToro, Kraken, and a few other folks that are in the process of going public have been contemplating that for the last few years. I think it's both, I think Circle is quite unique in that landscape because they are pure play stablecoin and infrastructure provider. I think a lot of the other companies that are currently active and seeking to go public, they have business models that maybe a bit more standard to this industry that are resembling the Coinbase or the Robinhood business model. But the fact that the entire regulatory environment changed to the point where it's also permissible for companies that are engaged with digital assets to go to the public markets, getting the OK signal from the SEC, that's also a pretty important and positive development.
Let's focus on the growing institutional momentum around stablecoins. with PayPal becoming the first financial institution to launch a US dollar-backed stablecoin back in 2023. The year before, Stripe started offering USDC payouts, allowing marketplaces on the platform to pay their sellers and service providers using the stablecoin. What do developments like this mean for the adoption of stablecoins? And do you see more institutions jumping into the space? What's your outlook?
Yeah, for sure. So right now there are basically three main use cases that those institutions are enabling. The first one is really the payout use case, where companies like Stripe and others are able to provide the ability to send and remit money to individuals, contractors, and marketplace participants around the globe. The second one is really the ability to on-ramp and send money cross-border, what we call the stablecoin sandwich. So that's essentially just like a faster way to move money using stablecoin and not using the SWIFT system that is somewhat slow and outdated. And the third one is the ability to provide bank accounts denominated in US dollars in developing economies like Argentina and Turkey and other geographies in Africa. So there are companies like Dollar App and Yellow Card and so on that are doing it across the world. Now, mostly it was concentrated in the fintech space, and we are now seeing banks starting to engage and learn how they can develop around this business model, usually either by issuing their stablecoin or issue tokenized deposits, which is also a form of it's called like digital asset-based money, or servicing their clients in a more direct and streamlined way, right? So if you want to basically do an international wire, instead of using SWIFT or IBAN that you would usually do through your bank account, or going through a fintech that will provide you the capabilities of using a stablecoin, banks are now looking to understand how they can embed that functionality within their user interface, within the services that they provide, either individuals or merchants or businesses that they are working with, and allow you that experience of like better way just to move money.
Okay, that's all for Crypto World today. We're back again tomorrow, and we'll see you then.